In Investing 101 today, we are turning to Norm Champ, a former director at the SEC. Norm, you were hired as a director of the Investment Management Division as the Bernie Madoff case was coming to light. What would you say the SEC is focused on now?
I think the SEC continues to focus on some of the main issues that they have pursued over the years. Number one there would be fees and expenses that are charged to customers, right? So the SEC over and over again for decades has looked at what fees and expenses are financial firms or brokers, asset managers or brokers charging to customers. Were those fees disclosed? Were they calculated correctly? Were they allocated to the right customers? That continues to be a huge area of focus for the SEC, and I think will be for the foreseeable future. Also, they're very interested in conflicts. Is there some reason that you as an asset manager might have a conflict relative to the client, some incentive to act on your own behalf instead of the client's behalf? So that remains another area that they look at very often.
What should financial firms be revealing to investors?
Public companies, right, which have an obligation to tell all material facts to the public, and certainly the SEC continues to look at those. In our financial services world, the equivalent is, what do you tell your customers? Have you told your customers how you're going to invest? Have you told them what the fees are going to be? If you're a broker, have you told them that you don't have a duty specifically in their best interest, but have you told them what fees you're going to charge? So those are the main areas.
What are your takeaway tips for investors?
Very important for consumers and retail folks. We're having a big surge of people into the workforce now with the economy booming. That means money in people's pockets. So important to think about, don't get fooled by the scamsters out there and the Bernie Madoffs. When I was at the SEC, one of the main sources of fraud is something called affinity fraud, where you know someone at church, you know someone at a community group, and you give them money to invest. There is no reason to do that. Go with established financial firms that you've heard about. When you're starting out in savings, go to those firms, invest very simply in mutual funds, in stocks or bonds. Keep things simple in your early days. There is no reason to give the money to somebody who tells you they're going to make a huge return. They're not, and they very well may be a fraud. The SEC runs a broker check program and an investment advisor program. You can look up anybody on their website and find out if they have any problems. But I would recommend, more importantly, just go online and sign up with one of the established mutual fund providers. For very little money, you can open an account and get yourself exposed to the market. That's the simplest step when you're starting out. There's no reason to make it complicated, no reason to take a risk with someone who might steal your money.
Thank you, Norm. We hope to have you back on the show. Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.